All right, let's dive into Chevron's third quarter 2025 earnings. The numbers are in, management has spoken, and the market has cast its initial vote. We're here to break it all down for you.
And that vote? Well, it was a positive one. The stock closed up 2.7% on the day of the announcement, which tells you the street liked what it heard. So let's unpack exactly what got investors so optimistic. The story here really starts with the headline numbers. And for Q3, Chevron didn't just scrape by. They delivered a comfortable beat across the board. It's a clear signal that operationally, things are humming along. And here you see it in black and white, a clean beat on both the top and the bottom lines. Adjusted earnings per share, or EPS, came in at $1.85. That's a solid 10 cents better than what Wall Street was expecting. And revenue, almost $50 billion, which blew past estimates by more than $2 billion. You couldn't ask for a more bullish start to the report. Now, a huge reason for that revenue beat is this number right here, a record 4.09 million barrels of oil equivalent per day. To put that in perspective, that's a massive 21% jump from last year. This tells you a story about some serious growth in scale. And all that production? Well, it translated directly into cold, hard cash. The company churned out an impressive $7 billion in adjusted free cash flow. This is the metric investors really care about, right? Because it's the money that funds dividends, share buybacks, the whole shebang. Okay, so the headline numbers, they look fantastic. But to really get what's going on, we've got to pop the hood and look at the different parts of the business. It was truly a story of scale and getting the business mix just right. And this chart illustrates that perfectly. It really shows off the power of Chevron's integrated model. See, upstream earnings, that's the money from actually pulling oil and gas out of the ground, were down 28% because crude prices were a bit softer. But look at the downstream business. That's refining and chemicals. Earnings there were up an incredible 91% thanks to strong refining margins. That portfolio balance acted as a powerful cushion. So where did that record production come from? Well, you can point a giant finger directly at the Hess acquisition. This was the first full quarter with those assets in the fold, and boy, are they already making a huge difference. Management made it clear that the integration is going smoothly, and the synergies are right on track. So what did Chevron do with all that cash they generated? They gave $6 billion of it right back to shareholders through dividends and buybacks. And the really important part is that this was all covered by that free cash flow we just talked about. That shows some serious capital discipline. Okay, let's shift gears from the hard numbers to the narrative. Because beyond the spreadsheet, the messaging on the earnings call was confident, it was clear, and it was all about executing a very disciplined growth strategy. The CEO, Mike Wirth, really framed the whole quarter with this powerful summary. The takeaway here wasn't just, hey, we had one good quarter. It was about building a resilient machine that can consistently deliver for shareholders year in and year out. And the game plan going forward is just as clear. Number 1, finish integrating Hess and squeeze out all those synergies. Number 2, keep ramping up those world-class assets they have in Guyana. And number 3, execute on a major cost-cutting program to make that cash flow even stronger. It's simple, powerful, and it's a plan that can actually execute. Of course, the real test is when the analysts get to ask the questions. The Q&A session is where the rubber meets the road. So what were they focused on? The questions all circled around the key value drivers. Analysts wanted to know about the Permian Basin, where efficiency gains just keep on impressing. They wanted confirmation on the Hess integration, which they got. And there was a ton of focus on Guyana and Kazakhstan, 2 massive international projects that are performing really, really well. The theme of the day was execution, execution, execution. So that's the quarter that was. That's the rearview mirror. The big question for all of us is what happens next? So now for our take on what to watch for and how we see this stock performing from here. We're tracking 4 key things. First and foremost, circle November 12th on your calendar. That's their investor day, where we'll get new guidance. Beyond that, keep a close eye on that Guyana production ramp, any news on those cost synergies. And of course, the big one, the macro picture for oil prices and refining margins. So the bull and bear cases are pretty clear, right? The bear case is all about macro risk. If oil prices fall, it's going to hurt their upstream earnings. And if there are any hiccups with the Hess integration, that would be a setback. The bull case, though, is all about execution. If Chevron can deliver on those Hess synergies, hit their growth targets in places like Guyana, well, the cash flow potential is absolutely enormous. So after weighing all of that, where do we land? We're initiating coverage with an outperform rating and setting a price target of $165. The combination of scale from the Hess deal and a laser focus on execution gives us real confidence that this momentum is going to continue. Frankly, we think the market is still waking up to the full cash flow potential of this bigger, stronger Chevron.
This is not financial advice.